This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 13th, 2015. Our time is 8:38 Mountain. Our radio show runs on 6:30 CHED in Edmonton, 3 o'clock in the afternoon on a Sunday. We're always happy to have all our great CHED listeners listening to us, and we have listeners all around the world. And the reason we do is the shows are streaming archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. If you ever miss a show, you can hear us there. As well, we have a podcast through iTunes. And I love iTunes. Not only do they have lots of great tunage, but they have our radio show in the podcast section. Type in the World Financial Report on Radio. You will find us there. We're portable. We go on any device that you have. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. It's a very confusing time in the world, financially, geopolitically, and if you have any questions, Harold is more than happy to speak with you personally and privately about what's happening in the world today and why we really believe that you need an allocation of hard assets in your portfolio. Connect with Harold at 1-800-432-1022, 1-800-432-1022, his website, rarecoloreddiamonds.com. Our featured diamond of the week from rarecoloreddiamonds.com is a .33 carat radiant cut fancy green, and it is spectacular. You can see it online, featured diamond, and that's at Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. In the news this week, before we get to Harold's commentary, China devalued the yuan. And it was just one of those things that took a lot of people by surprise. We are in a major currency war as a result of what's happening in China. They have devalued the yuan and continue to do so a little bit each day since it happened earlier in the week. Stephen Roach, a senior fellow at Yale University and former Morgan Stanley non-executive chairman in Asia, says that it raises the distinct possibility of a new and increasingly destabilizing skirmish in the ever-widening global currency war. He says the race to the bottom just became a good deal more treacherous. Also, Jeff Gundlach, a bond guru, came out and said, oil, if it gets to $40, we could have geopolitical trouble. In fact, read an article, and we have it in our free weekly newsletter, which you can get from Harold, where Saudi Arabia, even though they're keeping the oil price down to try and drive out competitors, in 2 years' time, they are in serious financial difficulty because of what they're doing and a lack of money that they're bringing in due to the oil price being down around $40. David Stockman said stocks are a disaster waiting to happen. He was involved in the Reagan administration. Alan Greenspan, former Fed chief, saying, be afraid of a pending bubble in bonds. Warren Buffett coming out saying this week, it's going to be tough for the Fed to raise rates in September, and I definitely agree with him. The bailout in Greece went ahead, although experts are taking a look at it and saying there's no way that this is going to be able to be met. The conditions will never be met. So here we go again. Japan, this is a staggering number. Their national debt has really increased over the last 4 years as they've gone into more quantitative easing in a major way. The debt is 1 quadrillion yen. That's right, quadrillion yen, 1 quadrillion. And in the United States, last Friday, they had the job numbers come out. 94 million people in the United States not in the workforce. 60% are working, 40% are not. That is a 38-year low. But Harold, you know, you have a currency war underway, as Stephen Roach said. The race to the bottom just became a good deal more treacherous. And that's why we believe you need to be in hard assets like diamonds.
Oh, you better believe it. Again, diamonds are one of the only assets that can be sold in other currencies. And it looks like every currency is in trouble. There's only 3 currencies that are strong currencies at this point, which means stronger than the U.S. dollar. One is the British pound, the Swiss franc, and the euro. Now, we know that the euro is in trouble, and the euro, in my opinion, is going to be lower than the U.S. dollar sometime this year. So when they said that they devalued a currency like the yuan, it's against the U.S. dollar. So what you saw this week was an overreaction in the market. You saw gold increase substantially, went over 1,100 to about 1125, 1130. However, the market is down. Gold this morning is down almost $10. And I'll explain why this is all happening. The other thing the other day is that the U.S. dollar dropped substantially. So why would the U.S. dollar drop if China devalued their currency? Because they'd be devaluing their currency against the U.S. dollar, which is the major currency. So if China devalued their currency, shouldn't that have been bearish for gold and bullish for the U.S. dollar? In the long run, yes, it certainly is. The reason that the markets overreacted is, number one, there was rumors that the yuan could be reduced by as much as 10%, and China, Vietnam, they have definitely denied that. So they say that basically the two reductions in the yuan, and that's it, they're not going to reduce it anymore. So the market overreacted to that. So in my opinion, what's going to happen is that the U.S. dollar is going to continue to strengthen. You know, the shame is that the U.S. dollar is getting so strong, it's up 30 points as we're taping the show right now, but it's getting so strong that it's not good for the U.S. economy. Because the bottom line is that when the U.S. dollar was weaker, there was a lot of tourism. A lot of people came from Europe, a lot of people came from Canada, and came down to the United States because there wasn't a currency issue. Now there is a currency issue. The U.S. dollar is considerably stronger than the Canadian by 30%, and soon to be much more than that. I'm predicting that the Canadian dollar is going to be 40% below the U.S. dollar within the foreseeable near future, and probably before the end of the year. Now, that's going to hurt trade. There's no doubt about it that it's hurting trade between Canada and the United States. On top of that, this year was one of the worst years for Canadians coming down to Florida or to the warmer areas because of a 30% difference in the currency. What it basically means is, in order for a Canadian to buy $1,000 worth of U.S. currency, it cost over $1,300 in Canadian dollars to convert that. And it wasn't that long ago that the Canadian dollar was stronger than the U.S. dollar. So one of the major reasons that we've always recommended diamonds, especially over the last 5 or 6 years, is because of currency devaluation. All of my Canadian clients that own diamonds, and diamonds are priced in U.S. dollars, if you bought it a couple of years ago when the Canadian and American were even, you're up 30% on your diamond just because of the currency alone, let alone what the diamond has gone up. So that's why we bring these type of markets to you, these type of alternative assets that my clients are doing extremely well. You know, the fact is that as these currency markets drop all over the world, the U.S. dollar gets stronger and stronger, and the markets that we're recommending, gold, which is priced in U.S. dollars, and diamonds, which is priced in U.S. dollars, are the markets that I believe our clients are going to make the most amount of money. Now, here's what we see happening. We've been saying that oil will continue to drop now that Iran is going to be able to start pumping oil again, and that's happening as we speak. Just the idea that Iran, the sanctions have been lifted, and Iran's going to be able to pump oil has dropped the oil market down, which is down another $1.10 today to $42.20. So with the article that's in the newspaper this week, in the newsletter this week, which is talking about $40 oil being detrimental to the world economy, well, we're definitely going to break $40. My feeling is we're going to $20 or $25 over the short term. If Iraq and Iran continue to pump as much oil as they are, and believe me, Iran will definitely do that because they've had a few years now of sanctions. They have no money. They don't care at this point here if they're losing money on every barrel that they produce. They just need the revenue. And Saudi Arabia is trying to hurt the North American oil production because that's what caused the problem in the first place, because the United States, you know, with their extraction in the up in North and South Dakota, that's what's really upset the Saudis. So at this point, you've got an oil war going on. We're at $42.20. $40 will be broken. $25 or $20 is not out of the cards. And at that particular point, the Canadian dollar will drop to around 60 cents against the U.S. dollar. My prediction is that we're going to see the U.S. dollar at about 108, 109. I'm not sure if they're going to take a risk of raising interest rates at this meeting in September, because the U.S. dollar is already strengthening, and I don't know how much stronger they want it to be at this point against all the other currency markets. However, if they do raise interest rates, if the Fed does raise interest rates, it's only going to be by a quarter, maximum 0.5%, and I would be surprised if it was 0.5%. Regardless of the fact, they don't know what the repercussions are going to be by raising interest rates. Number one, a rise in interest rates will strengthen the U.S. dollar. That'll push gold prices even lower. But on top of that, what's it going to do to the stock market? Is it going to hurt the stock market? I think initially it's going to. I think you're going to see a sell-off. I think a lot of the investors on Wall Street do not believe that we're going to see a hike in interest rates in September. Also, a rise in interest rates is not good for the real estate market. What's good for the real estate market is very low mortgage rates, not higher mortgage rates. And then the mystery is what's going to happen with the derivatives market, which is the most frightening of all markets. The derivatives market, a rise in interest rates could trigger a massive sell-off in that market. It's unregulated. It's in the quadrillions of dollars, and it could definitely bring down the marketplace. So there's other things. The U.S. owes trillions and trillions of dollars, and by raising interest rates, it increases the debt. It increases the interest payments. So I don't see where a rise in interest rates is really a good thing at this point. I think it's extremely risky. However, it does not deter from what my feeling is towards the markets. Over the short term, we still are sticking with our price of $1,000 in gold. I believe that's going to happen. In September, we've been called up to New York. We're finally going to get our importer's license. That should happen around the middle of September. Means that we're going to be able to bring our clients physical gold, 99.9 kilos of beautiful gold, the most beautiful bars I've ever seen, and we want our clients to make money. So we're going to allow our clients to buy physical gold at spot price with no commission. That means if gold does go to 1,000 and you buy gold at 1,000, you're not paying a penny of commission and you're not paying any spread. Kitco, for example, which is a very good company, they charge $22.90 over spot on gold. We're not going to charge anything. We need our Canadian clients to do well in this market, and between diamonds and gold, you're going to see. Now, we're not saying to buy gold yet. Right now, gold's trading at around 11.16. It was at 1,080 last week. I do believe that with the strength of the U.S. dollar, that gold is going to drop to 1,000, and it should coincide with our introduction to physical gold coming up within the next 3 or 4 weeks. So, again, Randy, I see the markets remaining the same. There's a lot of trouble out there. There's a lot of concerns, a lot of volatility, a lot of the unknown. But the bottom line is, as long as the U.S. dollar is doing better than every other currency, which it is, we're going to see lower gold prices for the short term, higher U.S. dollar, and lower oil prices, and a lower Canadian dollar. Please be prepared for that.
Connect with Harold at rarecoloreddiamonds.com. Learn about what's happening in the world, financially, geopolitically, where you should have some of your money shifted to take advantage of what's happening in the world today. Connect with Harold at 1-800-432-1022. And remember, anything that's said between you and Harold, it's 100% confidential. Personal, private, telephone call. Harold will be happy to talk to you. 1-800-432-1022, rarecoloreddiamonds.com. Our featured diamond of the week, a 0.33 carat radiant cut, fancy green. Go to rarecoloreddiamonds.com, click on featured diamond of the week, and you will see video of the diamond there. It is an absolutely stunning diamond. One of the things that is going to be maybe an offshoot of what's happening in China with them devaluing the yuan is them exporting deflation around the world, which deflation is something you don't want. And Albert Edwards warns, prepare for overwhelming waves of deflation that could suck us into a recession. Albert Edwards is with Societe Generale, and he said he warns the Chinese devaluation is a step towards a financial market rout every bit as large as 2008. In his new note, Edwards says the Chinese currency devaluation is the beginning of a period of serious foreign exchange weaknesses in Asia. This will force down import prices into the United States and EU economies, aggravating a deflationary cycle that hits corporate profits and ending in a Lehman-style crisis. He says, we expect the acceleration of EM devaluations to send waves of deflation to the West to overwhelm already struggling corporate profitability and take us back into outright recession. As investors realize yet another recession beckons without any normalization of either interest rates or financial imbalances in this cycle, the expert opinion is a financial market rout every bit as large as 2008. And if Albert Edwards is right that we have China sending deflation to the rest of the world, some people believe Japan is already doing it, we have some serious ramifications for the financial markets in the days and months and weeks and years to come. One of the stories I thought was quite interesting, get our free weekly newsletter from Harold. Connect with Harold at rarecoloreddiamonds.com or call him at 1-800-432-1022. The free weekly newsletter is the companion to our radio show. If you want to be on the same page and read the material that Harold and I are seeing from mainstream sources, then definitely get your name on the list. We will be happy to send it to you free of charge. You can spend 5 minutes, 10 minutes going through and be completely up to date, or spend hours if you want. Frank Holmes came out with something that was very interesting this week, and it puts things into context. Gold might be falling, but really it's held its own against one key sector. A recent Bloomberg article points out that the gold rout has cost China and Russia $5.4 billion, an amount that would sound colossal were it not for the fact that U.S. media companies, which have taken a major hit, such as Disney and Viacom, collectively have lost over $60 billion for investor shareholders in as little as 2 days last week. And we have a picture, a graphic in our free weekly newsletter. It goes on to say below are the weekly losses for just a handful of those companies. And to give you an idea, and this is from August the 3rd to August the 7th, Disney lost $20.78 billion in market cap. 21st Century Fox, $7 billion. Viacom, $4 billion. You had CBS close to $2 billion. Time Warner, $750 million. And gold itself the market cap was down $300 million. So you can see that when the stock market goes, it goes very quickly, and some of the market caps take a major hit. And that is definitely the case with what's happening with Apple. Apple has peeled off quite a bit, and they've lost quite a bit of their market cap as well. Obviously, we believe, as Harold has said in the past, that gold could go lower and give us an opportunity to jump in at that time. But the stock market itself, Harold, is a very, very risky place, and we talked about it off the top of the show. David Stockman, who is involved in the Reagan administration, coming out saying stocks are a disaster waiting to happen.
Well, I definitely believe that is true. You know, a lot of the companies in the U.S. that do business overseas, the dollar is a major issue. The dollar is going to be a major issue with trading with all countries at this point, because almost every country is devaluing their currency. Look again what's happened in Venezuela. Venezuela has had sanctions against them, but their currency has fallen so severely that a loaf of bread in Venezuela costs $200. So you can imagine, at a time when most of the world is going through deflation, which means lower prices, the fact is that places like Iran, places like Venezuela, Russia, they're going through inflation, in fact, massive inflation, because, again, their currency just doesn't buy anything anymore. So there's a lot of problems going forward. There's no doubt in my mind that the stock market could be in trouble. However, I've seen the stock market shrug off all major situations, and the fact that the Chinese stock market has plummeted as much as it has, the U.S. stock market, the Dow, should have been down several thousands of points. So the fact is, you see it down 100 points here, 200 points there, 40 points there. It's not the massive moves that it should be seen. We should see the Dow down, several hundred points in a day, 300, 400, 500 points. It's just not going to happen. Right at this particular point, you've got a better chance of seeing Dow 20,000 than you do of seeing the Dow drop down to 10,000 over the shorter term, because of that plunge protection team and the fact that when all the dust settles, the U.S. is the best game in town. They've got, even though the currency is in big, big trouble, the fact is it's being controlled right now. The U.S. can print more money than anybody else. The fact is that the U.S.'s dollar is extremely strong because the U.S. made it that way. So the bottom line is that no matter how bad things are going out everywhere else in the world, things are going better in the United States, and that's why the U.S. dollar is strong, and that's why the Dow will probably go to 20,000, even though it doesn't reflect the real problems in the U.S. economy. So, again, just watch for that because that is going to happen.
Jeremy Siegel, who wrote a book, Stocks for the Long Run, and is from the Wharton School of Business, said that it could get pretty treacherous in September, October. That is a very scary time for stocks. And he actually reiterated what Harold mentioned, that we could see 20,000 on the Dow, but it could get very treacherous here in the next couple of months. Our featured diamond of the week, a 0.33 carat radiant cut fancy green. Take a look at it at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Doug Noland, a commentator, had some very interesting things to say in a commentary this week. He says, I have posted my case for the granddaddy of all bubbles. I believe the current global government finance bubble is in the final of a historic multi-decade bubble. And each week I see important confirmation to the thesis that this global bubble has been pierced. Ominous storm clouds are building in global credit throughout the global markets, in economies, within societies, and all about geopolitics. Things are turning serious. And any talk of a stock market correction completely misses the point. The entire bull thesis is coming under fire. This was a key week from the perspective of my analytical work. The crisis broke through to the core of the core. I would expect crisis dynamics to speed up now. Also, it was interesting to note Matthew Lin in an article from MarketWatch said, sooner or later, there will be a genuine crisis. A revolution will topple the Saudi regime. Japan will default on its massive debts. The Chinese middle class will demand democracy. France will leave the euro. Any of these things would be huge. If the gold price did not soar on any of those events, we could conclude it is no longer a safe haven. But until something on that scale happens, it's still too early to say. A lot of people have been coming out saying gold is no longer a safe haven. Obviously, we would disagree with that thesis. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com, and speak with Harold about our featured diamond of the week. It is an absolutely stunning 0.33 carat radiant cut fancy green. Go to Featured Diamond of the Week at rarecoloreddiamonds.com. See video on this diamond. If you'd like to invest in the diamond, speak with Harold. rarecoloreddiamonds.com, 1-800-432-1022. We're going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August the 13th, 2015. Our time is 9:03 Mountain. A radio show is portable. We go anywhere you do. All you need to do is subscribe to our podcast, or you can download our podcast at your leisure. You can do it via iTunes. Type in The World Financial Report on Radio in iTunes, and you will find us there. The shows are archived on Harold's two websites. They're streaming anytime you want to listen to them, HESradio.com and rarecoloreddiamonds.com. Connect with Harold if you'd like to receive our free weekly newsletter. You can speak personally and privately with Harold. He'll be happy to talk to any of our radio listeners anytime, anywhere. rarecoloreddiamonds.com, 1-800-432-1022. 1-800-432-1022. And we always stress any conversations are personal and private. I know that people from time to time will ask me what I have, and I say for confidentiality reasons, I'm not saying anything. Because in the world today, the way it is, I don't think you want, and Harold has brought this up, he taught us well, You don't want people to know what you have. Also, definitely take a look right now. Go to the website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. And our featured diamond of the week, click on featured diamond of the week. You will see our featured diamond. It's a 0.33 carat radiant cut fancy green. And we have some info this week on the Dresden green diamond, which it's hard to believe, but dates back to 1722. It is one of the most spectacular greens in the history of the world, the most spectacular green on the planet. If you'd like to take a look at the Dresden green diamond, also take a look at our green diamond that we have from rarecoloreddiamonds.com. And rather interesting, I guess it was about 4 or 5 months ago, we had Nicki Minaj get engaged. She was engaged and got a heart-shaped yellow diamond. And then we had Iggy Azalea get engaged, another pop star, and she got a yellow diamond. Now, Hugh Hefner's son, Cooper, got engaged to Harry Potter actress Scarlett Byrne, and Hugh Hefner's son, Cooper, Harold, gave her a yellow diamond. So it seems like yellow diamonds as engagement rings seem to be the trend of late.
I would certainly say so, Randy, and those are beautiful diamonds. That Dresden green is just absolutely amazing. And the fact that they knew anything about green diamonds and could have cut that diamond in that way going all the way back to that time is just an unbelievable diamond. But green diamonds are extremely rare. Green diamonds come to us because of radiation in the ground, because of uranium, actually. So when uranium enters the ground and comes in contact with a rough diamond, it can turn that diamond green. However, green diamonds are different than any other diamond as far as cutting them and getting them through GIA, which is the Gemological Institute of America, GIA, Gemological Institute of America in New York. And what they do is they grade diamonds. You never ever buy a diamond that doesn't have a grading report from GIA. The grading report tells you everything, the 4 C's, everything you need to know about the diamond. And if you're ever going to resell your diamond, you definitely need to have a GIA report. So the fact is that when a diamond cutter brings a diamond to GIA, most of the time GIA knows the cutters that they do business with. So when you bring a green diamond to be graded by GIA, it's different than any other diamond because when green diamonds come out of the ground, it's almost got like a black film over it. And for years and years, the cutters of diamonds that found these diamonds thought that they were black diamonds and sold them as black diamonds. Now, black diamonds are not overly valuable. They maybe sell for, a few $100s a carat type of thing. They're not expensive diamonds. But green diamonds can be worth anywhere from $200,000 to $300,000 a carat, or $2 million a carat, depending on the saturation of that diamond. So when you want to get a green diamond graded by GIA, you need to bring it as a rough diamond, and they have to view it as a rough diamond with the black film on it and everything. And then as you go through the cutting process of changing that diamond into a beautiful green, you probably have to bring it back to GIA 2 or 3 times during the process in order for them to be able to determine how well the cutting of that diamond is going. And if you don't do it that way, it's very possible that GIA could grade that diamond under color as undeterminable, meaning that they can't determine whether it's a natural diamond or not. And if that was the case, a very valuable green diamond could be worth almost nothing. So that's why you go through the process, that if the very, very odd chance you could ever get a green diamond, they're one of the rarest diamonds ever, but that's the process that must be done in order for GIA to give it a good grade. Now, most green diamonds come from Central and South America. My partners are from South America. They're 3rd generation. So we have a collection of green diamonds that defy description. In actual fact, we have some green diamonds being cut that are beyond rare and are worth millions and millions of dollars. So the fact is that when dealing in the rare colored diamond market, it's different than almost any other market that you can deal with. The thing is that these are alternative investments. Alternative to what? Alternative to stocks, bonds, and commodities, basically. So basically, as an alternative asset, it's traded differently, it's purchased differently, it's viewed differently. And a rare colored diamond, they've got track records. Not all diamonds are investment quality, but the ones that we bring to you are. Yellow flawless diamonds have a track record. They increase by about 15 to 20% a year, depending on the color and depending on how strong the color is. Then you've got the Argyle pink diamonds, probably the best investment diamonds in the world today, because the Argyle mine in Western Australia produces 95% of the pink diamonds in the world, and that mine's going to close in less than 5 years. The prices of pink diamonds can skyrocket. They can go up 500 to 1,000% over the next 10 years. Then you've got green diamonds, blue diamonds, red diamonds, orange diamonds. These diamonds are so rare that, again, very, very few are ever shown, because very few ever come out of the ground. So when you look at what's happening in the world markets today, you look at gold is dropping right now, which is confusing to most people. I try to keep it pretty simple as to why it's happening. But the fact is that it's upsetting that gold is dropping during a time when a lot of people think the market should be going up. So basically, the fact is that the markets are not all going the way that most people want. We anticipate gold to go to $1,000. We still anticipate that the price of gold over the longer term will not only break $2,000, but go substantially higher than that. We also look at the world stock markets. The world stock markets are in disarray. All throughout Europe, their markets are all plummeting. What's happening in China, we know 2-3 weeks ago, their market plummeted by 30% in 2 weeks, and now they devalued their currency. Currencies are devaluing all over the world. It seems that anything that is a mainstream investment, like stocks, bonds, currencies, people are losing fortunes in those markets. The markets that they're not losing fortunes in fact, are not only sustaining their money, but making money, are hard assets, alternative assets like diamonds, art, and classic cars. Those are 3 areas where prices are going through the roof. So why don't we concentrate on that? The thing is, and I said it at the beginning of the show, is that I'm Canadian. I'm living in the United States, but I was born and raised in Canada, and most of my family is still in Canada, and most of my business is still in Canada, and most of my clients are in Canada. So what we've seen over the last few years is that the Canadian currency has changed against the U.S. currency. So all of my clients over the last 5 to 10 years that have bought diamonds when the Canadian and American were even, or the Canadian dollar was stronger, we got tremendous value. Putting aside how much the diamond may have gone up in value in the last 5 or 10 years, we know that just because of the currency alone, our diamonds are 30% higher because they're priced in U.S. dollars. So my clients have made 30% on their diamonds just on the currency alone. That's how great this type of investment is. Then take into consideration that an Argyle pink diamond can increase by 200, 500, 1,000%, depending on how strong the color is. If you bought a diamond for $100,000, and when the Argyle mine closes, you got a vivid pink diamond, and it's now worth $1 million, it's worth $1 million US. That means it's worth, right now, 30% more than if it was in Canadian dollars. That means that if you sold a diamond that you bought for $1 million US, and convert it back to Canadian, you're getting back $1,300,000. That's how this works. That's why I brought diamonds to you 10 years ago, when nobody else even knew that these type of assets existed. Just like when we recommended gold back in 1999, 2000, when people were laughing at us for saying buy gold at $250, and it went to $1,900. And silver went from $3.80 all the way up to $50. So we know our business. And now we brought you diamonds that we said buy diamonds because of the currency markets, because of currency devaluations, and look what has happened. The Canadian dollar is devalued by 30%, and all of my clients that own diamonds have made 30% just on the currency, let alone what these amazing diamonds will still go up in value. So I'm ecstatic about this. And what I did, because I do trade the currency markets and I do a lot of business in Canada, so basically I hedged the U.S.-Canadian currencies, and we made some extra money on it. We had some very large orders going to Canada. So what I did, and we offered this last week, and we're going to offer it again this week, because we hedge the Canadian-U.S. dollar, we will allow our Canadian clients only to buy our diamonds, which are priced in U.S. dollars. We will sell them in Canadian dollars. That means that anybody that purchases one of our diamonds will be up 30% on the currency alone. As soon as you buy that diamond, you're already up 30%. And the only reason and way that we can do this is that we overhedged the currency markets and we made additional capital. I'd rather turn this over to my clients, get them into the right market, because there is no doubt that the price of diamonds, the worse the currency markets get, the more these diamonds go up in value. The people from Europe that were getting killed in the currency markets because of what happened with Greece and what's happening with Italy, Spain, Portugal, and everyone else, again, diamonds would have saved their financial life. What's happening in Russia, what's happening in Venezuela, all those places, people that had their currencies devalued could always come and sell their diamonds elsewhere and get instant cash. The Greek people definitely could have done that. It's one of the best assets you could own. Now, let's not lose sight of the fact that you don't buy a diamond today and sell it tomorrow. You're not going to make any money. You got to give it a chance to increase in value. They're longer-term investments. Most of my clients that buy diamonds put them away for retirement. They're way better than owning stocks. We all know how much stocks can plummet, but it never, ever happens to a rare-colored diamond. They never, ever decline in value. So, Randy, at this particular point, we are going to extend the offer. Any of our Canadian clients that would like to invest in rare-colored diamonds, we will sell you our diamonds that are previously priced in U.S. dollars, and we will sell them to you in Canadian dollars, which means that you're making 30% on the diamond immediately. And the reason that we want to do this is that we want our clients to get into the markets that are going to make them the money. Don't forget, we make money in this together. When you sell your diamond, we get 10% of the profit when you sell it through my company. If you buy a diamond for $100,000 and sell it for $1 million, and you make $900,000, we get 90, you get 810,000 profit. That's the way we run our business. If we do a good job for you, we share in the profit. We only take 10%, where Christie's and Sotheby's take 25% on each end in commission. So again, we're ecstatic about what's happening in diamonds. The featured diamond is amazing, but so are the yellow flawlesses, which start at about 15, 20,000, and the Argyle pinks, which again are going to go through the roof because the mine is going to close, and you can buy these all in Canadian dollars and be up 30% as soon as you buy them.
An incredible opportunity through rarecoloreddiamonds.com. Speak with Harold personally and privately. 1-800-432-1022, 1-800-432-1022. Not many investments you could invest in and be up 30% immediately. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week, a .33 carat radiant cut fancy green. Take a look at it at rarecoloreddiamonds.com, featured diamond of the week. And we're taping our show on, it's a Thursday, and it's August the 13th, 2015. I have a report that I'm holding in my hands that I printed out and I have kept all this time. It's a 4-page report, verification. It was actually printed out on August the 9th, 2005. August the 9th, 2005. It was written by Harold Siegel back then. Naturally Fancy Colored Diamonds, the Best Kept Secret. And Harold brought this report to us. He started Rare Colored Diamonds at that time and told us that we should be investing in these diamonds. A lot of people felt that having a rarecoloreddiamonds.com website would not be a success. It's been a massive, massive success. Investing in rare-colored diamonds has been a huge moneymaker. And it's interesting to note, in this report, Harold says, I believe the next emerging market in fancy-colored diamonds are the high-graded yellow diamonds, mostly because they are affordable for now and very beautiful. This is a report that was done 10 years ago, so happy 10th anniversary, Harold, on this report, bringing it to all our radio listeners' attention, investors and clients, and the 10th anniversary of rarecoloreddiamonds.com. As I've said before, I really don't believe you get the credit you deserve because you were there at the very beginning talking about investing in diamonds, and we see the marketplace today where so many people have come around to your way of thinking. We're talking major companies. Major organizations have come around to your way of thinking when you brought that to us 10 years ago, a major coup on your part, and rarecoloreddiamonds.com, that you brought the website forward, you brought the idea of investing in diamonds forward. We had the financial crisis, and people did very well in diamonds. And I just have to congratulate you. It's the 10th anniversary of rarecoloreddiamonds.com, and you really developed something within an industry. You were a pioneer, and I hope at some point you do get recognized.
Well, thank you very, very much, Randy. I can't believe that 10 years has passed since we wrote that report, and a lot has changed in the market, and I'm very proud of what we produced. When we looked at the diamond market, and I did all these studies and everything on it, I knew that diamonds were a good investment. However, there was never a secondary market to resell them. And coming from the commodity business and understanding marketing, that's the biggest contribution I believe that we're making to the diamond business, is the way to resell diamonds for small investors. Yes, Christie's and Sotheby's are major auctioneers and phenomenal companies and great at what they do, but they don't sell for the smaller guy. The smaller guy, client that invested $20,000 in a diamond. They don't trade and deal in those. They deal in, the multi-million-dollar type of diamonds and that type of thing. So realizing that most of my clients are just hard-working, everyday people that just want a fair shake. They want to own something that is not as risky as stocks, and it's making them more than 1% if you put your money in the bank. And again, the introduction to diamonds, where, again, we introduced it as a strong investment, has turned out to be so much more because of the change in the currency market. So, again, Randy, thank you very much for bringing that up. I am very proud of what we built, and the fact is that we're only in the fledgling stages of it. What we're building in the diamond business is unprecedented, and the fact is that I believe we will be the major leaders in the business because we encompass all aspects of it. We are cutters and polishers. That means we own our own mines and we produce our own diamonds. That's why we can sell diamonds at the prices that we do. Then on top of that, not only are we cutters and polishers and miners, but we also own the company Rare Colored Diamonds. Rare Colored Diamonds is the pathway to looking at beautiful, affordable, investment quality diamonds. Every diamond that we have on our website is affordable, to most people, and natural diamonds. And then on top of that, we also own Diamanti Atelier, which is our jewelry division. We have over 3,000 museum-quality pieces of jewelry that we've made ourselves. They're spectacular. And then on top of that, we own HES Fine Auctions, which is a secondary market that resells our clients' diamonds down the road. Now, most of our clients are not selling right now. The biggest money is going to be made over the next 10 years with the Argyle mine closing. And then on top of that, we also have our private investment, which is our investment into the rough diamond market that paid our Canadian clients 24% a year. 24% a year at a time when you can't even make a 1% by putting your money in the bank. So these are the type of programs that we brought to our clients, the type of businesses, and one of the best is by far yet to come. I've been letting everybody know the progress of our introduction into physical gold, but we made a phenomenal deal with a major gold miner in South Africa, and we are going to bring to our clients physical gold. Now, it's only going to be sold in kilos at this particular point. It's 99.9 gold, pure gold. They're amazing, the most beautiful bars I've ever seen. And because of the deal that I was able to strike, put up a lot of money. I put up $5 million in escrow at a time when these miners were not doing any business. I'm now going to be able to sell to my clients kilos of 99.9 grade gold in beautiful kilo bars with no commissions and no spread. Even Kitco charges almost $23 spread on gold. We're going to charge nothing. That means that if you buy gold at $1,000, you're going to be able to be in profits at 1,001 penny. We are not going to make any money on you. So this is what we're in. Again, my companies encumber everything that you need in order to be safe in the financial markets and to make a lot of money. We've got rarecoloreddiamonds.com. We've got HES Fine Auctions. We've got natural diamonds. We've got a Diamanti Atelier, and we've got our new gold business coming up along with our mining business. So no matter what level you want to invest in, we can help you, and our clients are making a lot of money right now. So if you are not in that situation, if you're not making money in the markets and afraid of what's going to happen in stocks and bonds and cash and everything else, give us a call I'll talk to you, let you know exactly what's happening and what is best for you, and then you make up your own decision.
Connect with Harold at rarecoloreddiamonds.com. Telephone number 1-800-432-1022. Our featured diamond of the week is a .33 carat radiant cut fancy green. See it at rarecoloreddiamonds.com, featured diamond of the week. And the truth is, Harold was the leader, and everyone else who has come since has been following, and Harold is the person to deal with. He's been the leader in this market. Speak with him personally, privately, about investing in rare colored diamonds, museum quality diamonds at rarecoloreddiamonds.com. I think the thing that has impressed me the most about being involved in the diamond business, talking about it on a weekly basis on our radio show, is the fact that, yes, diamonds are an investment, and people have done very, very well. There's no getting around that. But I always think of the people that take the diamond, put it in a ring, put it in a jewelry setting, or buy jewelry, and obviously that's an investment because the diamond is in there. But that's the most joy I get, is seeing people wear the investment that they put their hard-earned money in. When Harold had the seminar here, and I've mentioned this before, there was a guy who had purchased for his fiance, or maybe it was his wife. She had an Argyle pink diamond, and she was showing it to a group of people, and everyone was oohing and awing. And the feeling she had with everyone around her looking at that diamond ring and everyone just being so in awe, the feeling she must have had was just really, really good. And that's the other side of investing in diamonds and jewelry, a stock certificate, bond certificate, T-bills, real estate, whatever. You know, you don't walk into a room and have, as we joke all the time, a stock certificate or a bond certificate on your ring or lapel or whatever, Harold. You walk into a room with a diamond, and it commands attention. And that's the other side of this that I really enjoy the most, because people are enjoying the diamonds, not only just as an investment, but something that they can have and wear and just be proud of on an everyday basis. We have about 3 minutes left here in our segment.
I agree with you 100%, Randy. They certainly are beautiful, and the fact is phenomenal investments, and that's my major concern. I want my clients to do well. And again, we will do very well in the diamond market. All in all, again, crazy week. China devalued their currency twice this week. The markets went crazy. Things in China, they're trying to settle the stock market and all that type of thing, and nothing seems to be working at this point. Things are still just as bad in Europe. Greece is not going to get out of this trouble. So the bottom line is that if they do raise interest rates, the Fed does it in September, we'll see how the markets react to it. There's some mystery there. But again, my gut feeling tells me very strongly that gold is going to go down to 1,000. The U.S. dollar is going to continue to skyrocket. Oil and the Canadian dollar are going to continue to fall over the short term. But again, these are all going to lead to phenomenal opportunities. The markets come to us. Let's just wait for the market to come to us, and then we'll deal with it when it does. But I'm very optimistic. I like the direction that my company is heading. I like the fact that my clients are making a lot of money at this point. And if you're not making money, give us a call and let us explain to you what we're doing. Hopefully, you'll join the club.
It is a very treacherous time, as Harold was saying. We have countries devaluing, as China did, and we talked about Stephen Roach a little earlier, coming out with a quote saying it's a race to the bottom. In fact, he said the race to the bottom just became a good deal more treacherous. Jeff Gunlike, bond guru, saying, if oil goes to 40, geopolitical trouble around the world. David Stockman, stocks are a disaster waiting to happen. And Alan Greenspan, former head of the Fed, be afraid of a pending bubble in bonds. Now is the time for hard assets. Speak with Harold about our featured diamond, a .33 carat radiant cut fancy green. See it at rarecoloreddiamonds.com or call Harold at 1-800-432-1022, 1-800-432-1022, the website, rarecoloreddiamonds.com. Thank you very much, Harold Siegel, for another great show and your knowledge.
My pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with us. Obviously, you can listen to the shows anytime, rarecoloreddiamonds.com or HESradio.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.